The Monetary Policy Committee of Bank Negara during its final 2021 meeting has decided to maintain the overnight policy rate at 1.75%. This is after taking into account the risks to Malaysia's economic growth remain tilted to the downside on external and domestic factors amid lingering COVID-19 pandemic concerns and expectations for inflation to remain moderate. In a statement, BNM said that risks to Malaysia's economic growth outlook include weaker than expected global economic growth, worsening supply chain disruptions, and the reimposition of containment measures due to new COVID-19 variants. The central bank notes that while economic activity weakened in the third quarter due to containment measures, now with the relaxation of restrictions, the latest high-frequency indicators show that economic activity had recovered from the trough in July. Going into the new year, the growth momentum is expected to improve, supported by expansion in global demand, higher private sector spending as economic activities resume, and continued policy support. Headline inflation for 2021 is likely to average between 2 and 3%. BNM says the MPC considered the stance of the bank's monetary policy to be appropriate and accommodative, and that Malaysia's fiscal and financial measures will continue to cushion the economic impact on businesses and households. However, the central bank reiterates that this stance will continue to be determined by new data. The OPR at 1.75% remains the lowest on record and has been maintained since July 7, 2020. The OPR was its highest of 3.5% on April 26, 2006 and was kept at that level until October 24, 2008. Meibang says that investors should expect dividend suppression after the government unveiled the one-off Cukai Makmur or prosperity tax in the recently announced Budget 2022. Meibang head of Malaysia and Regional Equity Research Anand Pathmakantan says that some companies may be delaying their normalisation of dividend payouts to 2023. He says that for banks, regulators have played a part in suppressing dividends during the height of the COVID-19 pandemic to conserve capital. But Anand says that as the world recovers, the banks should have a lot more freedom to pay and go back to historical dividend payouts. Meanwhile, according to Anand, some companies have the privilege of being extremely cashed up during the pandemic, and he expects these companies to maintain their dividend payouts to shareholders. He says that while these companies do pay more taxes, their huge cash piles mean that they would be able to continue with capital management uninterrupted. Burma's Auto is expecting better quarters ahead following the extension of sales and services tax exemption for vehicles, and says that the global chip shortage situation will have minimal impact on the group. According to B Auto Executive Chairman Datuk Sri Ben Yeo Chun San, this is because around 70% of its sales is driven by completely knocked down cars. The chip shortage affects completely built up cars more, as CBU cars have better connectivity and rely more on electronic chips. According to Yeo, the group's vehicle sales improved to 4 digits last month, and he is hopeful the growth momentum will continue with the coming festive season and the reopening of more economic sectors. He says the recent supply challenge was due to low inventory from the temporary manufacturing plant stoppage during lockdown. The situation is expected to be resolved soon as the group has resumed full operations. B Auto is also targeting to lessen the waiting period for the delivery of new cars to 1 week from 1 month currently. As for the group's CBU cars, Yeo says the waiting list for car delivery is about 2 months at this point due to the global chip shortage. Bursa Malaysia is warning Sarawak Consolidated Industries that it will suspend the construction firm securities from trading starting November 9th if it is unable to submit its FY21 annual report by this coming Monday. SCIB share price has more than halved in roughly 3 weeks, falling from 50.5 cent on October 12th to 19.5 cent on November 3rd. It closed today 4.9% down at 19.5 cent. To recap, Bursa on October 25th had rejected the company's application for an extension of time until December 31st to issue its FY21 annual report. SCIB explained in an earlier filing that the change in external auditor and the impact of movement restrictions in Malaysia and overseas due to COVID-19 have hindered its efforts to finalise and issue the report. This is the second company controlled by businessman Datuk Dr. Muhammad Abdul Karim Abdullah to run afoul of the stock exchange over compliance issues. Its sister company, Serba Dynamic Holdings shares and warrants are currently suspended, as Bursa insists that it failed to furnish material information related to the special audit review of its financials. Teleport, the logistics venture of Airasia Digital, expects to secure funds of between 50 million and 100 million US dollars by the end of this year. This is to fund its expansion to add 6 freighters by 2023, with the aim of being listed in 3 years. Teleport CEO Pete Sharanwasa says the company is raising capital as part of its journey to becoming an independent logistics company. He says that Teleport has been talking to private investors, mostly equity and venture capital driven, due to their understanding of the potential disruptive model Teleport is building. According to him, Teleport is almost separating the network, the pipes, from the airline operations, doing so across markets by combining 250 aircraft from AirAsia, where it has 6 freighters. Sharanwasa adds that Teleport is even potentially eyeing AirAsia's large A321 order book of 360 plus aircraft outstanding, where it could convert some planes for its long-term operations.